Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, have a beautiful retirement. I am one of your co-hosts, Ben Barzideh. I have my trusty, esteemed co-host with me, Matt Nadeau here.
Hey, everyone.
And we want to just wish everyone a happy new year. Hope you had a great holiday season. And this year, we want to wish you prosperity, health, wealth, all that good stuff. Hopefully, your employer didn't get bought out by private equity or anything like that, because that might not make the year quite as enjoyable for you.
That would not be the Santa Claus rally. That would be the Grinch who stole the holidays.
But we're deviating here. All right. We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington. And we are fiduciaries, and as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies that are buying everything up these days.
Yeah, and again, we want to just take a moment, say Happy New Year, and say hi to all of our clients who are faithful listeners every week. Of course, we appreciate that you listen to us. We also appreciate that you've placed a lot of trust in us. And of course, we love every one of you. And we have a great show. We're going to kick off the new year. We're going to talk about a few specific items. We've talked a lot about gold earlier in the year. Well, guess what? Now silver's time to shine. It's been going parabolic. It's incredible. We're going to talk about it. And then what we really want to focus on is, as we head into 2026, what are the main pillars that are going to drive the market, and what are the status of those pillars? And then later in the show, we're going to talk about something. If you're a business owner, there could be a way for you to turbocharge your retirement with something called a defined benefit pension plan. It could be powerful. It could help you tremendously. You don't want to miss it.
It's like, you ain't never going to believe what we're about to say. You know how they say, how do you say, like if you're telling a story in the South, you know how in the North they say once upon a time? You know how you started out in the South? You ain't never going to believe this stuff. You ain't never going to believe what we're about to tell you with that in that segment. So you want to listen up, especially if you're a small business owner. All right. But before we get into that, if you are listening to us on our YouTube channel, please hit like and subscribe. It's free. It doesn't cost you anything. It's a huge boost to our channel. Please also follow us online at BN Wealth, our social media pages on Instagram and Facebook. And also, please subscribe to our weekly economic newsletter. It's called the 5-Minute Market Brief. It's informative, succinct, and we get so many good reviews on it. It helps you stay tuned with what's going on and what we're seeing.
Yeah, so take a minute, go to moneyhourradio.com and smash that button. Is that what the kids say? Subscribe, please. It'll help us. All right, guys, let's talk about silver. I can't really think of many things I enjoy more in life than when a position that we've invested in our client portfolios really takes off and actually makes some good money for them. And one of the many areas that did that for us in 2025 was a precious metal sleeve that we've been utilizing. And it is comprised of gold, silver, copper. And man, silver has just been amazing. It's done the best out of those three. So in 2025, silver was up at this recording at about 150%.
Insane.
With just, December alone, a 30% rise. So in fact, if we go back to Friday, December 26th, it had its largest one-day dollar gain on record. It was up 9%. So what's going on? There's maybe 3 potential reasons we're seeing as why this is happening.
No doubt. So silver is witnessing strong industrial demand, as it's used nowadays in just about everything, in electronics, solar panels, semiconductors, these data centers that everyone's building, medical coatings, and other industrial processes. And actually, according to reports, nearly 55 to 60% of the total global silver demand is consumed by industries. And the U.S. has also listed silver as a critical mineral, adding policy support to the metal. It's also seen as a safe haven, very similar to gold. So there's a lot of geopolitical tensions right now with Venezuela, Nigeria, Ukraine, Russia. There's always stuff going around in the world, right? And then also, lastly, central bank actions. So investors expect the Fed to cut rates at least one more time this year in 2026. And that should help to keep the dollar lower, which usually pushes up silver prices. So commodities and the dollar are inversely related. And then also central banks around the world keep adding to their precious metal reserves. So, I mean, it's the demand, things are pointing up for silver, that's for sure.
Yeah. And honestly, We love metals right now. We've loved it all year. Like with all of our investments, we're not married to them all the time. There are times we will get out of them, but
Great point.
when the going's hot, time to ride that sucker until you can,
No doubt.
take it to the top. So let's switch it up a little bit, with silver and metals, but let's look at the broader market and the status of the four pillars that are driving it. And again, for reference, the four pillars of this market is AI enthusiasm. We want to expect stable economic growth. We're going to have ongoing rate cuts. And then the hope is also general tariff stability. So let's talk about that first pillar. We've talked a lot about AI enthusiasm, and I would make the argument that is still the most important pillar that's supporting these markets. So strong earnings growth from the mega cap tech companies, massive AI related capital spending, and improving supply chain data, including strong Taiwanese industrial production, they're all still in place. That's great. And additionally, this massive AI infrastructure cap spending is still acting like this private market economic stimulus plan.
But, and this is a big but,
Yeah, I like big butts.
Matt likes big butts and he can't. No, all right, listen, keep it clean. This is a
It's family
family
show. I'm sorry. It's the holidays. I guess I got to be careful.
But as we start 2026, it's fair to say that AI enthusiasm is under much scrutiny, and markets are becoming much more selective, and investors are no longer rewarding every company that just merely mentions AI. Instead, leadership is narrowing toward firms that can demonstrate real earnings leverage and capital discipline. In other words, some actual profits from AI would be nice.
Yeah, that's
people are
always what you
looking for.
expect, right?
So what's the verdict? Well, AI enthusiasm is still in place, but not as strong as years past. So now let's talk about pillar 2, stable economic growth, which was actually the unsung hero of 2025 and demonstrated that when growth is stable, and it doesn't have to be spectacular, as long as it's stable, the rest of the market can hold up.
So good news is as we start 2026, I mean, virtually all of the growth metrics, and we're talking about like the PMIs, retail sales, durable goods, they're all showing solid activity. And at least right now, none of them are in danger of implying that growth could immediately or suddenly stall. And the labor market, that's a different story. I mean, unemployment rate is at a 4-year high at 4.6%. So the worry would be is if that unemployment rate continues to go higher, let's say to 5% or above that, that's when we would really have to be worried that there could be some economic warning signs. But the verdict, this is still in place, and we want to keep an eye on the labor market.
Pillar 3, ongoing rate cuts. And again, there is some uncertainty there. So the Fed had signaled no near-term rate cuts and just one this year in 2026. So at least positively, the Fed is not making it a headwind on growth, but all these rate cuts that we had in 2025, probably not going to be there in 2026. So verdict, it's still in place, but not as significant as before.
And the last one we were talking about is tariff clarity. So, of course, markets surprised everyone last year by literally just ignoring the largest tariff increases we've seen in decades. But as we start 2026, there could be potential tariff uncertainty. So we've got the Supreme Court's tariff decision expected earlier in 2026. And if tariffs are indeed struck down, that could cause potentially significant uncertainty about maybe tariff refunds, the reimposition of tariffs using other statutes. It could be a mess. So the verdict is it's still in place, but there's risk of damage early in 2026.
So there you have it. That is what we're thinking. That is what we're seeing. And we will be monitoring these pillars very closely because it can affect how we invest in our advance and protect strategies that we utilize for our client portfolios that we manage here. We are still very bullish, heavily invested in equities. We have not taken our foot off the gas. In fact, in some of our more growth-oriented models, we are pedal to the metal, 100% in equities. However, we watch our positions every day. And if we do see that things deteriorate, we will not hesitate to get defensive and actually get out of the market. We will literally get 100% out of the market at times if the conditions warrant it.
And the question is, do you have a defensive plan? Because you probably do need one. And if you do it after the crash, it's too late. And here's how you can learn more, not only about our investment strategy, but also about all the big changes that are coming up for taxes and estate plans for 2026. we're going to invite you. We'd love to have you come to an exclusive educational dinner workshop. It's at a beautiful local country club on Thursday, January 29th at 6 p.m. You're going to get a delicious steak. You're going to learn, is your retirement plan ready for all of these changes? You'll also learn about our Advance and Protect actively managed investment approach. Seating's limited. It will fill up quickly. To reserve your spot, call 847-780-2980 or visit bnwealth.com. All right, don't go away, but when we come back, how business owners can turbocharge their retirement. Welcome back. Thank you for tuning in to Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. And I'm one of your hosts, Matt Nadeau. I've got with me my esteemed co-host and partner, Ben Barzideh.
Hello, everyone.
And as I said, we're both partners. We're founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive financial planning firm. We're local. We're right here in Barrington, and we're serving the greater Chicagoland area. And we like to say we have a very simple motto. It's do great work, have fun, and give back. And that's why we started the charitable arm of our company. We call it BN Giving. And it's a way for us to invest in your purpose with you.
Here's how it works. If you become one of our clients and you're a faithful tither or a giver to a qualified 501c3 charity, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us. And as our firm grows, so does the collective positive impact that we can have. It's such a neat concept. We're very proud of it. In fact, if you go on our YouTube page, we have a fantastic 10-minute video on there titled The 6 Best Ways to Give to Your Church or Charity. And if you are a part of a church or another charitable organization, you should watch that. And if you want to learn more, we'd love to connect. Actually, our team offers complimentary educational options on tax-efficient giving strategies that can allow donors to maximize their tax deductions while the church or charity receives actually more than they would have otherwise. So it's like a twofer. And by the way, if you're not a regular giver, that's okay too. A lot of people aren't. We'd still be honored to work with you. So to explore how you can join our BN Giving community by becoming a client, reach out to us online at bnwealth.com or call our office at 847-780-2980.
All right. Well, let's jump in and let's talk about if you're a business owner out there. There is a way to turbocharge your retirement with something called a defined benefit pension plan. So, if you're out there, you're a small business owner, buckle up. You absolutely want to hear this. Actually, even if you're not a small business owner, buckle up anyway, because you probably are not going to believe what we're going to tell you. So I got a question for you. How would you like to put away $150,000 to $300,000 each year
Or more.
or more maybe into a tax-deferred company plan retirement? Say, what? How's that possible? I mean, you're probably thinking, as most people are, I thought the most I could contribute to my 401k was $24,500. So, okay, maybe I'm 50 or older. Now I can get it up to $32,500. Well, we're not talking about a 401k.
No, we're talking about defined benefit pension plans, or as we like to call them, retirement on steroids. And this is the closest thing the IRS gives you to a cheat code. And here's what we're talking about. Picture this: 401k and a defined benefit pension plan walk into a bar. The 401k orders a light beer or one of those spritzers everyone's drinking these days. The defined benefit pension plan orders a pitcher of beer, a 32-ounce steak, a baked potato, and says, "Put it on my company tab." And then he walks out into the sunset with the most beautiful girl there. Ladies and gentlemen, that is the defined benefit pension plan.
Sounds like a dream or something of yours there, Ben. I mean, all right, it sounds amazing so far, but what really is a defined benefit plan? So defined benefit plans are employer-sponsored retirement plans that will guarantee a specific payout at retirement. So the benefit formula often considers factors like age, years of service, your compensation, and because contributions are actuarially determined, owners can often make contributions far more than what's allowed in a SEP IRA, a simple IRA, or a 401k. And these contributions are fully tax deductible to the business. It'll reduce taxable income during your peak earning years. This is when you're making the most money. You want to utilize it. So while defined contribution plans like a 401k have a cap on your annual contributions, these defined benefit plans do not actually have a fixed contribution limit. There isn't one.
It's incredible. And unlike a 401k where you put in a set amount, and some would say pray to the market gods for growth, a defined benefit plan actually works backwards. So you start by deciding the benefit you want to have in retirement, like the income you want to have. Like you say, maybe I want to have $290,000 a year starting at age 62. And then an actuary does some math wizardry there to figure out how much you need to contribute each year to get there. So you back it in. And older business owners can contribute significantly more because they have fewer years to fund the promised benefit. And this structure makes defined benefit plans uniquely powerful for entrepreneurs, business owners who begin saving for retirement later in life, or who experience higher incomes in their 40s, 50s, and 60s, basically like most business owners. And because the IRS is surprisingly generous here, the contributions can be, let's just say, massive.
Yeah, it's incredible. Let's talk about there are technically some limits for 2026. So the IRS does say the maximum annual benefit you can fund, right? When you're backing your way into it, the most you can pay yourself per year is that $290,000, right? And that is income you would be receiving per year starting at age 62. So that's a massive amount. Most people don't have a problem with that level. And then once you back your way into it, the contributions are whatever amount is required to hit that maximum allowable benefit. And because contributions are based on actuarial calculations, not a fixed income or fixed limit, it is not unusual to see these annual contributions be somewhere between $150,000 and $300,000, sometimes even more, depending on some of these qualifications.
It's insane. And here's why small business owners, like we mentioned, should be drooling right now after hearing this. So one of the first benefits is the tax deductions are ridiculous. I mean, if you're putting away, $300,000 a year into this plan, imagine how much it reduces your taxable income. I jokingly say it reduces your taxable income faster than my little kids can mess up our clean house. And it's perfect for late stage savers. So if you spend your 30s and 40s building your business instead of your retirement account, a defined benefit plan lets you catch up at what we call warp speed.
Yeah. And what's cool about it is you can actually stack this on top of a 401k. I mean, you heard it right. You can have a defined benefit pension plan and a 401k. It's like you go to a nice wine tasting, Ben, and they do those little pours and they're just like, have the whole bottle. Why not take the whole thing?
Exactly.
It's impressive. And then this is definitely something that is ideal for specific types of businesses, right? So this isn't always best for everyone. So it's ideally designed for, like, let's say you are an owner-only business or an owner-dominant business. So the idea is, okay, let's say you as the owner is like older than most of the employees. That's a positive. That can help. If your business has few or no employees, that's great for this. And as an owner, you want to have some consistent and high income to meet these large contributions.
So here's the bottom line. These defined benefit pension plans are the closest thing small business owners get to like a time machine. They let you make up for years of undersaving, slash your taxes, and build a retirement benefit that would make your future self stand up and say, well done, well done. Pat yourself on the back.
Golf clap.
So as with any financial planning, investing, tax, or estate planning strategy, it's essential to work with qualified professionals who know what they're doing. Usually a good financial planner like us is the quarterback of the plan, and we help coordinate this with other professionals like your CPA or your attorney.
And I'd say if you're out there and you're in need of a knowledgeable financial planner, someone who will, of course, put your interests first, we'd be honored if you'd give us an opportunity to talk with you. And if our investment and our financial planning philosophy resonates with you, please reach out and schedule a complimentary consultation. That will give us an opportunity to spend some time with you and go over your current financial situation and your goals, and we can provide a financial checkup.
Wait, okay, so something we have to address. So last week, Matt, my trusty colleague here, he said the P word we're not supposed to say, and that's the physicals.
Yeah.
Physical's fine, but if you combine it with these other two words, free, financial, and then the P word that rhymes with physical. I guess that's been trademarked. So we said that before one time on our radio show. We got a cease and desist, some petty someone out there that was saying you can't say that.
We apologize. It is a financial checkup and
Yes.
it's free.
Exactly.
And we're going to analyze your insurance, your estate plan, your taxes, your investments. And if things look good, you're going to get some peace of mind. And if there are holes, then you know what areas you need looked at. And many people have never had someone look at all these areas at one time for them. And then bottom line, if we can help you, that's great. If not, that's okay too. We'll still part as friends.
And here's some big news. Major tax and estate changes are coming in 2026. As you know, they could have a big impact on retirement. Well, we would like to invite you to join us at our workshop for an exclusive educational dinner workshop at a beautiful local country club on Thursday, January 29th at 6 p.m. During this complimentary event, we'll walk you through the most important tax, estate, market changes taking effect in 2026. We'll go over how these new rules affect IRAs, required minimum distributions, Roths, all while you enjoy a delicious steak at a stunning country club.
Yeah, so space is limited. You're going to want to reserve your seat. Give us a call at 847-780-2980 or visit bnwealth.com. We look forward to seeing you on January 29th. We're out of time. God bless you, and we'll see you next week.
Bye, everyone.